Good weekend, all. Ira Epstein of Linn & Associates with your weekend edition of your market wrap-up. And this is for Friday, and we are now on the 12th of February, 2021. On the weekend edition, we look at the weekly charts to try to get a bigger picture of what's going on. But as you know, the big picture has really been in the stock market. The metals have been tame with a few exceptions. Copper's been one powerful market. Platinum is hitting 6-year highs. So there are parts to the market that have come alive. It's not in the silver, not in the gold just yet. The dollar has been stable, to say the least. The dollar's interesting because it had been longer term bearish and it's had a nice bounce, and the question is what next? You've been on fire on the energies. Can you believe Brent oil for April? $62 a barrel. Do you remember not so far ago, long ago, that it was a negative $40 for oil? Remember that? And here you are with the opposite. Wow. All right. When we look at a monthly chart of gold, we're in a corrective stage. We are not bearish. While the swing line, which is this brown line on the chart that I teach in the charting course, has a pattern of lower highs and lower lows, it is fully countered by the fact that the market is staying over the 18-month moving average of closes. So we have the bias up. When a market is over the 18-month average, I call that bias, where its relationship to it. If it's up and the trend is down, they fight each other. You don't have anything. And momentum-wise, you've been in a correction and the market has just gotten itself out of being overbought. I define anything overbought as readings over 70. Well, just January 29th, you had that. We're at February 12th. The month's not over, obviously, and the market is trying to correct itself out of that. You get a better picture when you look at weekly charts. This chart has been in trouble since right here in November. If you go back and you look, from March through that time frame, the market was staying over the 18-week moving average of closes, which is what this line is. That meant the bias was up, and by nature, if the bias is up, one is looking for buy signals. When the market is under that, the bias down, it's a filter, I'm looking for sell signals. And you can see that that's kept the market on that defensive. When we take a look at this chart, we've been correcting since the 2050 area all the way as we're coming back down, and we're in a downtrend. If you are like me and you define a trend as having lower highs, lower lows, you have that. Lower highs, lower lows. I think you'd agree with me. The swing line looks at the differences between the weeks different than you do. It looks to see, do we have a week that's a higher high week, a lower low week, an inside week, an outside week down, an outside week up. There are 5 rules. I teach them, and I get you to the point in my charting course where you can plot them. It's consistent. That's why we do it that way. And the trend is down. It's negated if you take out 1876. Where is the bias of the market, that line in the sand? Well, you can see it. It's the 18-week average. So we have the trend down. The bias is down since the market is under that. The potential for a move right to the lower Bollinger Band. Look where the market's gone, and each time it's holding. Why? Because 95% of the time the market will trade within these bands. You can be the hero playing it's going to stay above it. I don't want to be that guy. You can be the hero, it's going to stay under it. I don't want to be that guy. Why? Because 95% of the time you ain't going to be right. That's all. That doesn't mean the slope can't be down and lower numbers reached. It's a question of time and price. Keep that in the back of your mind. In terms of momentum, it's still down. So on a weekly charts, we still have a pattern of lower highs, lower lows, bias down, momentum down. When we step over and we take a look at the gold-silver ratio, it continues to fall. What does that mean to you? It should mean that as the numbers get lower, silver is gaining on gold. In a perfect world, you went to your grocery store, you asked the manager, could you use his cart, right? You fill up 66.6 ounces, that's like the devil's numbers, 66.66 ounces of silver. You go down to the end of the mall, and there's that wonderful coin shop, and it says, yes, we don't charge commission. And you bring in those ounces and they give you an ounce of gold in a perfect world. That's how you measure what it is. And the less ounces you need, the stronger silver is relative to gold. Simple way to think about it. When I used to teach in the courses I did it for schools. I taught many courses to a lot of people. You got to bring it to ways they understand it. Notice where the market's fighting. Now, this noise up here, and it was noise, was caused by Reddit. They talked about the squeeze on silver, and very quietly, I'm seeing on social media, that talk is very much still going on. So we'll see what goes there, but the market's being held back by the upper Bollinger Band. Unfortunately, I cannot say it's in a trend. You got a lower and low and a higher high. I see the bias is up. I see momentum is flat. When we come to the copper market, you've kept this. Now, as we come together here, I want you to look at these numbers. Notice how you skimmed the 80 level, didn't close under it. An embedded reading occurs when the red and the blue get over the 80 level and stay with it. It's the most powerful technical signal I know. I'm sure there's others you know. And when that occurs, it tells me you throw away, number one, the swing line. You're looking for another methodology to enter. So I literally throw it off. I don't need it. My brain will not look at that anymore. I'm looking at a moving average that I don't show here and that momentum, and I'm looking for places to enter on the long side only. I am wrong if the red line closes under 79. As long as it doesn't, I'm continuing to look for the potential of a combination of another set of lines I don't show here called window envelopes, which are standard deviations from that number. They're all shown in my morning videos, all right? There'd be too many lines here for just a casual viewer, as I call you on YouTube, of seeing that, and the upper Bollinger Band. But ultimately, the upper Bollinger Band is one of, it is not the only profit tool. In the platinum, wow, 6-year high, as I said, powerful. Embedded reading over the 18-week average. You got everything that makes it up. Now you'll say to me, Ira, you're over it. And I go, I know you're over it. You've been over it before there. You've been over it before there. I can go on and on. You're over that before there. No, I won't. I don't get suckered in. That's where I think the pros are coming out, not in. Doesn't mean it can't shoot higher. There's such a thing as a trailing stop. There's many ways you can play it, but this is the liquidation area. This is where you're taking, in my opinion, contracts off, and you're looking to add them back, just like you were doing in there in the market. In the dollar index, this is a contra-trend rally. Why? Because you're still under the 18-week average of closes, so getting to the Bollinger Band and getting back to it makes all the sense in the world. This was an embedded reading. This is where, right there, you closed over 20. Remember I said under 79? Well, over 21, you lose the embedded reading. Only can get it back the very week after it's lost. If not, price and the 18-day average, or the closest moving average to it, and they're above the market, is the target. Got that? Very simple. Market, did it get back? Nope. So now, unless it gets back under that low, because you always have to have an out. Gee, what if it doesn't get there? I used to work with a chartist that was great. He's long gone. That was great. And his failure note, and it was a huge one, was the fact that it's going to go to that price and I'm not getting out till it gets there. Nonsense. It's the zone. It's not that it's not going to get there. And what if it doesn't? You have to have an out. It didn't work. I know where mine is. I'm still looking. Bingo. For me, the game was over there. Now I'm looking to see what next in the market. Close over 91.60. And as much as I think fundamentally the dollar's going to fall, it'd be an instant buy up there, and I'd be all over the market on the bull side. I know you find that hard to believe, but I'm a chartist, not a fundamental trader. The charts know more than I do. That's how I analyze them. So if you're interested in that type of thought process, every single morning, Monday through Friday, I am putting out a 25 minute video where I'm covering 40 charts. It's all the futures markets for you. The metals are all covered in detail. The VIX is covered in detail. Bitcoin is covered in great detail. I'll be covering Ethereum. Now, that's going to be in there, but I'm not going to cover the first week of trading. I've got to get some chart action in there to do that. I cover on the weekend version because it's not only during the day. On Monday through Friday, I put out a weekend edition of only weekly charts covering all that for the longer term traders. Each video starts with the news of the day. Remember, I'm up early. I've read the Asian news, the European, and I'm ready for what's going to happen in America. I cover the sequence in that exact fashion, that way so you know what's coming time and time again for you, and it's simple to follow. How do you get it? It's simple. All you need to do, it's the price of a cup of coffee. Come on, with a tip, that's about it. Just go to our website. It's all explained under the word research. Give yourself a sign up for it. See if you like it. Be surprised how many people stay with it. I'm Ira Epstein. You have a great weekend. Remember, President's Day on Monday, but the futures are open until many of them noon. I will talk to you at the end of the day, wrap up Tuesday, not Monday. Take care.